The other thing that I think about when I think of 3 to 5 years time, call it 5 years time, is that there's a trend that of bundling and unbundling and decentralization, right? So decentralization in crypto, we'll see it in AI, all sorts of stuff. I also think it's going to happen in asset management. And I think it's a monster because of tokenization. Yeah, we talked about the power of community, the power of a hive mind, the idea of super forecasters. And what it gets me to is that we're going to create crowdsourced tokenized asset management.
Hey guys, welcome to Everyday Finance. Raoul Pal delves deeply into the macro trends influencing the future of cryptocurrency and global wealth in his most recent analysis, highlighting why these trends are more important than ever. He clarifies that we are witnessing a significant structural change in the way wealth will be generated, held, and distributed in the upcoming years, rather than merely another market cycle. Pal claims that cryptocurrency is at the epicenter of this shift, driven by global liquidity, shifting demographics, and exponential technologies. He notes that digital assets are emerging as the new backbone of financial systems, and those who get in early stand a chance to benefit from one of the greatest wealth explosions in modern history. Understanding the long-term macro forces at work is more important than focusing only on short-term gains. Pal outlines the ways in which tech adoption, debt cycles, and central bank policies are combining to make cryptocurrency the next big asset class. For those who are paying attention, this is the future, not a fad.
Do you think AI goes to zero in cost? Just because of the nature of anything digitized that basically goes to zero in cost. You've taken trading fees down because of the high frequency traders, who take order flow. There's a whole number of reasons, but it just feels like AI is a race to zero in cost, which is an extraordinary thought.
I mean, the cost.
Well, obviously, power and compute in some way, shape, or form.
Yeah, the cost of compute is certainly going to zero, and there's a ton of investment towards more and more efficient compute. I think also the amount of intelligence, and I don't know if there's a good metric. People are still looking for the best metrics, but the sort of like intelligence per unit of compute is also increasing.
Yeah, exponentially.
Now the question, the important question to ask is, what does that mean for like aggregate AI spend? And I forget the rule. Maybe you remember it, but there's a rule that says, well, when you lower the cost of something, the usage of it tends to explode. So I actually wouldn't be surprised, at least for the foreseeable future, for the total amount of compute to continue to increase while the costs of the compute and the efficiency.
There's something law, I can't remember what it's called, but it was exactly this. Because remember when DeepSeek came out, the Chinese model, the markets freaked out.
Yeah.
Like, it's they've undercut them in price, and then people realize very quickly, well, the cheaper it gets, the more this is going to explode.
Yeah, exactly. Yeah.
How do you think your business is going to be using AI when we're out into the 3-year time horizon? It's too hard to think beyond that. I think it feels like the entire UX layer collapses into AI.
I don't think so.
No?
Yeah, I don't think the UX layer collapses into AI just because what we've noticed is, I mean, people want to use interfaces that are specific for the particular use case that they have in mind. So I don't think it collapses
a Robinhood
into
AI would replace most of the UX layer that you have on the platform currently, as opposed to a generalist AI.
Yeah, if by that, so I don't think there's just going to be a chat box that you have to type in, I want to buy this stock, or I want to, trade this prediction market, or buy this option. AI will probably streamline a lot of the software that creates custom interfaces for you. And I think in this particular space, if I have to look at products and who I think of the AI native companies are doing a good job, I think Perplexity is doing a nice job. They're really trying to go beyond the chat box into building kind of like bespoke experiences for sports, for finance, for other events. They'll give you a nice bracket if you look up information about the NBA playoffs, for instance. They'll do like a nice earnings transcription service. So that's kind of an example of flexible interfaces that are powered under the hood by AI, but understanding that, it shouldn't just push people into a standard chat box, but if you can kind of leverage that to make it easier to design bespoke experiences with like finely tailored UX, I think that would be really cool. So at Robinhood, we've got the engineering side, which was an early adopter of all of these models. I mean, we made it easy for employees and our engineers to take advantage of them, to use whatever model they wanted to use, to write code with the models. And then you saw it in a customer-facing way through customer support, where we very early started making investments. And now with Robinhood Cortex, you're seeing it front and center in the product in ways that solve very, very specific problems for users, which are stock digests and building options trades. And I think from there, we're going to take it even further. So we're looking for the biggest pain points where we think AI can make a considerable impact to the experience of a trader or anyone engaging with other financial products. And you're going to see that. You're going to see Cortex kind of expanding throughout the product suite across the board.
The other thing that I think about when I think of 3 to 5 years' time, call it 5 years' time, is that there's a trend that of bundling and unbundling and decentralization, right? So decentralization in crypto will sit in AI, all sorts of stuff. I also think it's going to happen in asset management. And I think it's a monster because of tokenization. Yeah, we talked about the power of community, the power of a hive mind, the idea of super forecasters. And what it gets me to is that we're going to create crowdsourced tokenized asset management. So therefore, people can essentially be hedge funds or asset management firms or ETFs because you can tokenize it and spin it up. It feels that that is another big disruption to come because, if you look at it as a disruptor, it's a multi-trillion-dollar industry full of incumbents that can't change. And yet the technology has changed everything. And the behavior patterns of young people have changed.
With a strong start to the week, Bitcoin has recovered well from recent declines brought on by geopolitical tension, particularly worries about the Israel-Iran conflict. After a brief decline, Bitcoin has risen back above $17,000, regaining important levels and closing last week firmly above $15,000, which many traders believe will serve as the base for the next significant increase. Momentum is undoubtedly increasing despite persistent uncertainty surrounding inflation and interest rates. The unusual alignment between whales and retail investors, both are holding strong, not selling, is what has everyone's attention. This type of belief is boosting confidence in all areas. All eyes are now on what the Federal Reserve will do next. Expectations for inflation have been complicated by the recent surge in oil prices, but most analysts think the Fed will probably keep rates unchanged. Long-term Bitcoin holders appear to be sitting tight rather than panicking, based on the cryptocurrency's low exchange inflows. A strong short squeeze could be imminent if you consider that the derivatives markets are still trailing spot prices. Many chart watchers think that this isn't even close to the top. According to some predictions, Bitcoin will soar past $170,000 or even reach $200,000 because technical indicators are still bullish and historical price cycles indicate more upside. In summary, the belief in a full-blown moonshot is becoming more and more strong, and Bitcoin's breakout moment might be just getting started.
Yeah, I think there's some interesting glimmers of what people are trying to do there. I mean, you have copy trading, which I think is kind of
in that direction, yeah.
It's a step in that direction. It's a little bit in weird footing from a regulatory standpoint in U.S. equities, but for crypto, you're seeing more and more of that. I think we were talking earlier about you were sharing some of the things that you've been playing around with, but yeah, copy trading is interesting, and that's just basically what you think about that as a way to integrate the UX and bring community and trading in one place. So
Exactly.
there's the benefit there. Tokenization, I think, is interesting because you get a couple of things. 24/7 and fractionalization are nice, but I think one thing that isn't often talked about is the portability of assets. So right now, if you're using, a traditional financial account like Robinhood brokerage account, your assets are in your brokerage, and it's actually very hard for them to leave. I
That's
mean,
right.
we come across this it's called the traditional ACATS process. You basically, I think at most places it still has humans in the loop, and it's, a highly laborious, intensive process that takes multiple days. So, if your broker has an issue, your assets are kind of locked there. But, one of the benefits of tokenizing and putting assets on a blockchain is that blockchain would have to be down for you to lose control of your assets. So it'll make portability much easier. If there's an issue at the application layer with one broker, a user could just use another broker and
That's right.
access their assets. So as long as the blockchain is bulletproof and robust, yeah, it becomes much less risky for consumers, and you get much less lock-in, and you can just switch between services and asset managers depending on who's providing the best value to the end user.
The other thing that is clear to me is capital formation is going to change. If you think about, we can all be cynical about it, but what happened with that Trump token was fascinating. I think it was the fastest, largest capital formation in history. Multiple $1 billion happened in a couple of hours. Now, it was, it's not exactly the right form, but, the financial markets and particularly crypto are very quick to use it in weird use cases, memes, stuff like that. But memes
Yeah.
of capital formation based around attention. Okay, fine. But it feels like, we had the ICO economy back in 2017. We tested the idea. We kind of screwed it up. But it feels like this is a big thing that's coming. And you talked about this as well, kind of, private capital raising. You raised via Angel List. I mean, I don't see why that should not be crypto.
I completely agree with you. I think that's a huge opportunity. And, we were talking a lot about trading and investing earlier. I think being an entrepreneur and entrepreneurship is sort of like another aspect of that. I mean, in the future, I think more people are going to be entrepreneurs. It's going to be easier to become an entrepreneur. And a big part of success or failure is having access to capital and getting it quickly to the point where it's not very distracting to you. I mean, if you
we
think
talked
about
about
it,
you raising capital in the beginning, and you weren't able to do product development because you're out raising capital. It's a huge distraction. It's incredibly stressful.
huge distraction. It takes up at least half of your time when you're a small team, and you have to do two very difficult things: make the product work and satisfy an initial customer base with a good product, but also you're spending half of your time raising money at the point where the risk and uncertainty is highest.
After briefly falling below $13,000 late last week, Bitcoin has pushed back above $17,000 to begin the week, indicating signs of recovery. The recovery coincides with rising geopolitical tension as the fourth day of the Israel-Iran conflict approaches, with fresh airstrikes and retaliation causing alarm around the world. Surprisingly, markets are reacting with cautious optimism despite the growing chaos. According to the most recent Kobe's letter, risk assets like Bitcoin, stocks, and oil are rising despite headlines that suggest further escalation. This suggests that some investors may be beginning to factor in the remote possibility of a peace deal, no matter how unlikely it may appear on the ground. Growing institutional interest is another factor contributing to Bitcoin's strength. The Japanese company MetPlanet recently announced a significant acquisition of 1,112 more Bitcoin, increasing its total holdings to an astounding 10,000. Big money is still pouring into the market, as evidenced by the $1.37 billion in inflows that U.S. spot Bitcoin ETFs saw over the course of the last week. But the graph presents a more nuanced picture. The level of $18,064, which is linked to a bearish fair value gap, is currently where Bitcoin faces significant resistance. Bitcoin may retest lows around $12,943 if it is unable to break above this, or it may even soar toward $100,000 in a wildly optimistic scenario. The market is still unsure, and this recovery is still fragile, according to the conflicting signals from technical indicators like the RSI and MACD. However, momentum may quickly change if Bitcoin can close decisively above $18,000, opening the door to regaining all-time highs close to $112,000 again. As of right now, the pressure is increasing, and what Bitcoin does next could determine how the cycle plays out.